Hello, chart watchers, and welcome to this Thursday, August 29th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Taking a look at the market, you got the Dow Jones Industrial Average trying to break above this congestion from earlier in August. We'll see whether or not we can make it this time. We've had several attempts without any success. But as you look more aggressively at some of the other indices, the S&P slightly more aggressive, not quite up to those highs. The NASDAQ even more aggressive, also not up to those highs. And then the Russell 2000, the most aggressive, really struggling. So still doesn't give a great look, but if we could get all four of these indices moving back up above these prior highs, that would be bullish. But nonetheless, we do have the Dow Jones currently up 320 points. The S&P up 35, the NASDAQ 112, and the Russell 2022. One big bonus today is that we are seeing the 10-year Treasury yield at least moving up temporarily. It's up 5 basis points to 1.52%. Volatility index, after nearly hitting 22 yesterday, showing much more weakness. So this is much better for the bulls than what we saw earlier in the week, where we really didn't come down much, even though the market did try to rally. Technology leading today, that's a good thing. Energy also having a strong day, up trying to battle its 20-day moving average. Communication services strong as well. The laggard, consumer staples, but a little ironic because the group is breaking out to a new high out of a cup and handle pattern, which is bullish, but it is the worst performing sector. Home improvements having a really strong day today in a flag pattern and breaking out of that flag pattern. This is a pretty significant breakout. We'll look at this chart in a little bit more detail in just a moment. Apparel retailers up again. The back and forth volatile world of retail continues. Big move today, but we'll see if we can get the breakout. Banks finally getting some relief as well with the 10-year Treasury yield up. In earnings news, Dollar General, one of the strongest relative performers, came through. Big earnings beat. Also big revenue beat. And raised guidance. Solid report and great reaction. Ollie's, on the other hand, Ollie's bargain holdings, outlet holdings, has been downtrending. Actually looked pretty bad on a relative chart. And we found out why. They came out, lowered their guidance going forward. You can see market not reacting very well, although it is off the earlier low. Stock still down more than 20-25%. It's a pretty big down day here on Ollie's. All right, Erin, Thursday, just one more day to the week. This volatility is driving me nuts. How about you?
Absolutely. That's why yesterday I wrote in my DP alert that, probably a good idea to be hands off. And I did end up divesting from a lot of my S&P following positions and just moved to cash because it's just getting, it's just too hard.
Yeah, it's been incredibly volatile, and the bad news is we're moving into the most volatile month of the year, September. So
exactly,
buckle your seatbelts, right?
Exactly, and that's exactly what I think I did yesterday. So I think I'm about a third in cash now. So
yeah, I think one of the big bonuses today, or one of the big positives that came out, is that China said that they were going to approach this trade negotiation much calmer. They were not going to retaliate because the U.S. had just imposed new tariffs. They were not going to retaliate to that, at least not now. And I think maybe, again, this news, just be done with it. I mean, I'm so tired of a tweet here or reply there, and the market's all over the place. It's you want to be in one day and you want to be out the next day, and it's impossible really to try and time this.
Oh, absolutely. I just think back in time when it was Greece in the news every day. So if it went down, it was Greece's fault. And if it went up, it was Greece's fault as well.
Exactly. And you know what? Do you hear anything more about Greece at this point?
No, exactly my point.
Yeah. I mean, we find all these things to kind of, really get nervous about. And then eventually they all kind of fall by the wayside. But what do we got going today?
All right, Monday we are closed because the market is closed. Tuesday, Tom and I will be out. So David Keller and Julius DeKempenaar will be your hosts on Tuesday. So you definitely want to tune in for them. Linda Raschke will join us on Wednesday, and our very own Bruce Frazier will be here Thursday to talk Wyckoff. Today's agenda, September seasonality. Tom's going to give you the skinny on all of that. And as he hinted at, September, not usually a good month. 10 and 10, our first symbol will be Twilio, TWLO. All right, let's get started.
All right. Well, we're going to first talk a little bit about economic reports. We do have the GDP, second quarter GDP came out, matched what everyone was expecting. It's a second estimate, but rose 2%, which is what the market was looking for. Initial jobless claims a little higher than expected. Pending home sales were horrendous. That is maybe a little bit of an understatement. But overall, I mean, when you look at the home building group, despite that report, home builders actually up today. And one thing you have to keep in mind when you look at these, many of these economic reports that deal with home construction is a lot of times they're quite a bit in the rear view mirror. In this case, we're talking about July pending home sales. We're getting ready to go into September. Interest rates have been falling. So the market really isn't paying that much attention to that. That's why I think that headline news, which looks so horrible, really didn't result in any selling in the home construction space. As far as the 10-year Treasury yield goes, we can take a look. I found something that's pretty interesting here now that we seem to have established a bottom yesterday. Who knows whether this holds, but what I would say is that the last time we saw the movement lower in the 10-year Treasury yield with the PPO rising, normally what I look for is a 50-period test and a centerline reset. We didn't quite get to either one, but you can see at least that we did stop that bleeding to the downside and at least went sideways to slightly higher for a period of time. If you notice what we did yesterday and then bouncing back up today, we've established a new low with a slightly higher PPO. So this is going to be an opportunity, I think, for the 10-year Treasury yield to make a push to the upside. That could be a real big positive for the stock market if that were to happen. Just something to keep in mind, because the biggest moves in the S&P 500 tend to occur with the 10-year Treasury yield rising as money rotates from the more defensive treasuries into the more aggressive equities. All right, earnings reports. We did have a few of those out last night and this morning. OKTA actually is a company that I was expecting a really good report out of, and they didn't really disappoint. They had a little bit of mixed guidance, but they beat on their top line, beat on their bottom line. They did guide quarter three earnings per share lower, but they guided their revenues for quarter three higher, and both the revenues and earnings per share for fiscal year 20 higher. So just a little bit of a blip there. The stock did take a little hit. We'll talk about that in just a minute. A number of other reports on there. I just want to point out Dollar General was very strong. Ollie's was very weak, and we'll take a look at those charts if we have time here in just a moment. But first, I wanted to point out a couple things before we look at those individual earnings reports. First thing is transports. I wrote about this in my blog this morning, but check this reversal out yesterday right at that May-June low. Nice bullish engulfing candle, and look at what we've got after it. Possible breakout back above the 20-day moving average for the first time in the month of August, which is good. Home improvement retailers, mentioned this at the opening. Going back a year, you can see this 440 to 450 area has been a lid on the home improvement group. Today, we are up 11 points to 460, making this breakout. PPO just beginning to strengthen. I think that's good news. Home Depot is one you want to watch. Home Depot is also making this breakout. Volume has been very strong of late as well. All right, among those earnings companies, OKTA. Now, they did, like I said, they pretty much everything was good except the upcoming quarter. The stock reacted negatively, but holding on to support. You look across the relative strength, yeah, it's pulling back today, but overall, we've got a really nice uptrend in play. As long as this price support holds, especially with that long tail down below, I think this one looks pretty good. Now, if you didn't see Ollie's coming out with bad news today, you probably haven't been watching what's been going on in broadline retail, because broadline retail from June through July was breaking back out again, and Ollie's was going down, resulting in a steep drop in their relative strength. So as they were getting ready to report earnings, they were near a 52-week low relative to the broadline retail group. That's a telling sign, and shouldn't be shocked when a company comes out and not only misses top line, misses bottom line, but also guides fiscal year 20 earnings per share and revenues lower. Completely different animal with Ollie's than we saw just 3 months ago. 3 months ago, everything looked great. It was a great relative performer. Things have changed, and you got to be prepared to change with them. Dollar General, great report. I think this was one of Erin's setups from earlier this week. The report was awesome. They beat top line, beat bottom line, guided revenues, earnings per share, and comps all higher for fiscal year 20. Huge move here. Looking at the same area of the market, though, Dollar Tree came out with their report, and we'll pull this one up. You see the difference here. Look at the relative strength in Dollar Tree versus the specialty retailers. And then let's go back to DG, if I can pull this one up, and look at the relative strength here versus these specialty retailers. I think you'll see a big difference there. All right, moving to the home page, your dashboard. And if we go down to these scooters, you will see that, let's see if I can find it here, CDNS right here, right in the middle of the large cap scooter movers. And when I pull up the chart, I'd be a little careful with CDNS. This is an interesting stock to watch because you can see the scooter's been declining. We are getting a move back up today, but look at the 20-day moving average, which has been holding as resistance. We're testing it again. And while software's been putting in higher lows on an absolute basis in August, you can see CDNS actually has moved down to some new lows. So on a relative basis, we're starting to see some deterioration. I wouldn't say this is overly alarming just yet, but I would be taking note that this is one that's beginning to maybe show some cracks in the foundation. I'd want to see volume get back up above that 20-day moving average. Until then, I would be a little careful, and that's why it is my scooter mover of the day.
All right, it is time for some upgrades and downgrades, and I will start with an upgrade of Ciena Corporation, CIEN in particular is the one I mean. And you can see with the upgrade, it has done pretty well. It's up 2.5% right now. Rosenblatt upgraded it from a neutral to a buy, and they have moved their target to $47. So let me guess, does that match right up there at those tops? It sure does. Somebody has a technical analyst on their staff. All right, so they're looking for it to move back up toward that overhead resistance at the July high. I'm looking here, and I believe I spy. First of all, we did break out of this declining trend that was going on, but if I draw this in and I draw another one here, that is a declining wedge. And that is a bullish pattern. And so the expectation is a breakout to the upside. PMO is turning up, so it's looking pretty good there for Ciena Corp. Hewlett Packard was upgraded today from a hold to a buy by Argus, and they have made their upside target to be, let's bring this down here. Whoa, hello. There we go, $18. So they're looking right up here. And as you can see, price is still well below that. Let me go way back in time and let's look at this a little bit closer. So we can see it actually, their target's not really matching up with any overhead resistance in particular. What I would be looking at is we've got to get a little closer here. I see a possible double bottom, triple bottom here setting up, and we have a gap to close. Right now, it can't get above that 50-day EMA, but I would be looking for that gap to close very shortly. Look at the PMO buy signal looking pretty good right now for Hewlett Packard. And then let's look at KC General Stores. I know this is constantly requested in the 10 and 10. And it was downgraded today from a sector perform to an underperform. And they have moved their target to 158, which I am guessing is right about in there. Yeah, a little lower than that. So they're looking for a breakdown below, obviously, the 20-day and 50-day EMAs, and that move lower. It's not really bothering KC General Stores that much. I don't think this one looks that bad. It probably is a little bit alarming and something to think about when you see this negative divergence going on with the PMO. But at the same time, it was accelerating pretty steadily. And when you do that, that does bring the PMO lower. And it's just not able to turn itself back up and hold on to a move to the upside, though. All right, that is it for your upgrades and downgrades. We will be right back. We have an interesting new show that is out by Chip, so stay tuned and check out what it is about.
Okay, welcome back, everybody. And it is time for September seasonality. This is just an opportunity for us to take a look at some of the things that have happened in the past. Not to say that they are going to happen again this September, but at least it gives you an idea of maybe some things to look for. I always use seasonality as a confirming type of an indicator. I don't use it as a primary indicator. So I would not look at this and say, oh, the S&P normally does this, so therefore I'm going to just follow it. Or a stock normally goes up 6% on average in September, so therefore I'm going to buy it until it goes up 6%. That probably would not be a great strategy to use. Instead, if you have a stock that typically has strong September seasonality and you happen to see a technical breakout, then that strong seasonality would then add or confirm that bullishness that I'm seeing on the chart. That's how I use seasonality. But with that, let's go ahead and take a look at some of what's been going on or what has happened in September's past. So I'm going to start here. You can see the S&P 500. Now, this just goes back 20 years. I have a spreadsheet that goes back 70. So I'm just going to start you off here, and you can kind of look at this. But you can see over the last 20 years, September has averaged going down 1%. But one thing that's important to note is that September goes up 53% of the time over the last 20 years. So it's about a 50-50 deal. And if we scroll this back to the last 3 years, September's been up every year. It's one of 6 months that's been up every year. So again, don't take this as some sort of a guarantee that we're going to see weakness during the month of September. It has a tendency to go down in the month of September, but it doesn't mean that we're going to go down. All right, a few things I just want to point out about the major indices before we look at some of the industry groups and the sectors and individual stocks. First, the S&P 500 has gone up 31 times and down 37 times, up 31, down 37 times in September since 1950. So there is a little bit of a bias over the last 70 years for September to end lower than it starts. It has averaged producing a annualized return of minus 5.58% during the month of September since 1950. So that's every September's trading days back since 1950. The annualized return is minus 5.58%, which is the worst month of the year. It's the 12th out of the 12 calendar months. They might say, well, minus 5.58% is not that big a deal. Well, it is kind of a big deal when you consider that the S&P 500 normally throughout the year goes up on average 9% a year since 1950. So we're talking about 14.5 percentage points of underperformance. That is pretty significant, especially when you consider going back 70 years. NASDAQ has gone up 27 times, down 21 times, with an annualized return, though, of minus 6.34%. It does rank 12th out of the 12 months. Russell 2000 small caps, and by the way, NASDAQ was since 1971. Russell 2000 since 1987 has gone up 19 times, down 12, and it has an annualized return, average annualized return of minus 1.65%, which ranks 10th of the 12 months. So you can see that it has the tendency to not be a very good month. I still would pay attention to the technicals. I would still pay attention to what's leading. If we break out and all of a sudden we're seeing money rotating back into the aggressive areas, I certainly would not be betting against a 10-year bull market. But again, seasonality is one factor to consider, and I want to give you the numbers. Now, some notable periods within the month of September. We tend to start off pretty strong. On the S&P 500, August 31st to September 3rd results in 31.05% annualized return. The bad news is that August 31st, September 1st, and September 2nd fall on Saturday, Sunday, and Monday this year, Labor Day Monday. So the good news is those 4 days generally produce some pretty good results. The bad news is they're all falling on either weekend or holiday this year, except for September 3rd, which is Tuesday. September 20th to the 26th on the S&P 500, it's a bad period. And that's right around when options expire. I think this year they will expire on actually, I think they expire on the 20th. I think that Friday is the 6th, so the third Friday would be the 20th. So I think you want to be careful. Maybe mark your calendar. That historically is a bad week. The S&P 500 has an annual or an average annualized return of minus 39.41% during that week, and that is going to fall right after options expire. So again, I would have that marked on my calendar. If I had some really good profits going in there, or maybe the S&P is hitting a major resistance level, or worse yet, it might be breaking down, just keep in mind that that following week tends to be very, very weak. All right, Russell 2000, wanted to point out that the September 11th to September 16th period since 1987 has produced annualized returns of 50.66%. So right in the middle of September, there tends to be a sweet spot for small caps. Might want to keep that in mind. And also NASDAQ starts off the month of September pretty strong, but it's really just the first couple of days, which again are weekends and holidays. So not sure how much we can take out of that to start September. We shall see. All right, let's talk a little bit about the sectors that lead. So I'm going to go ahead and change this now for you. And let's take a look at the XLU. XLU, now, again, we know that September tends to be weak. So when you look at September, you say, well, it's only up 0.1% on average. That's not very good. Well, it's not until you compare it to the S&P 500. And when you compare it to the S&P 500, what you will see is that the XLU only goes up 37% of the months of September relative to the S&P 500, but the average outperformance is 1.1%, which tells me if it's only happening 37% of the time and yet there's still a lot of outperformance, it's telling me that when we do have those years where September produces a strong month for utilities, it's a really strong month for utilities, which means it's a really bad market generally for equities. And that's what we have to be careful about, is knowing historically that September can be rough. Not every September, but periodically we do get some pretty rough Septembers. All right, let's take a look at another group that tends to do very well, and that is consumer staples, another defensive group. Of course they do well because it's a defensive month. It's when the market tends to do a look for more leadership from defense. Here you can see 53% of the time it goes up, no big deal. And again, only 0.3%. But that's pretty good when you compare it to the S&P 500, because the S&P 500, as I showed you on that first chart, seasonality chart, it averages going down 1% in the month of September. So if you're in some of these other areas where you're actually producing gains, and here over the last 20 years, you can see that the XLP relative to the S&P 500 goes up almost 60% of September's and averages outperforming by 1.3%. And when you look across all of these numbers, that is the strongest period for the consumer staple group on a relative basis. So a couple of things I think that are very interesting to keep in mind. Now, what tends to lag a little bit? Well, XLB, if I pull that up relative to the S&P 500, you can see materials only outperform 42% of the time, and the average underperformance, 1.4%. And when you go across the year, that's easily the worst month of the year for materials. Materials, in my opinion, outside of the recent surge in gold, I think overall the long-term downtrend in the XLB relative to the S&P 500 remains perfectly intact. So knowing that we're going into the worst month of the year doesn't make me feel any better about a group that's already been showing a lot of lagging on a relative basis. All right, technology. You would think that if the market is not so great in September, that some of the aggressive groups would be a little weak. Well, technology does beat the S&P 53% of the time, so it's about a 50-50 call. But when you look at the relative strength, you can see that September is the second worst month of the year for technology relative to the S&P. December is the only worst, and you can see that's a pretty low number in terms of the XLK actually beating. This is one of those sector stats that I always found somewhat interesting, that technology, because December generally is a pretty good month, but for whatever reason doesn't see leadership from technology very often. Okay, let's keep moving. So those were the sectors. Now, as far as some of the industry groups, just talked about the fact that, you know, some of the aggressive markets or aggressive areas of the market tend to not do so well during September. But if I pull up internet stocks and we go back over the last 20 years, September, October is really when this group gets going, gaining 3.4% in September and 8.7% in October. And look at those percentages. I mean, that's pretty high percentage chance that this group is going to end the month higher. And when we pull it up relative to the S&P, I think it's really impressive numbers. Look at how September and October really just stand out from the rest of the year. And look at that relative outperformance. That's pretty impressive going back the last 2 decades. So internet stocks, if you see internet stocks starting to rally, individual stocks within that group like Twitter, that's a group, or that's a stock I really like right now. Those are the ones that I would be paying attention to because, again, based on seasonality, this is an indication that could confirm a bullish move by these companies or by this industry group. All right, footwear. Another group that really likes September. We'll talk about Nike in a little bit. Going back the last 20 years, if that doesn't stand out on the chart, I don't know what does. Over the last 20 years, footwear has outperformed the S&P 500 almost 4 out of 5 years. So instead of, 4 out of 5 dentists recommend? Well, here, 4 out of 5 Septembers suggest that you want to be in footwear. Average outperformance 4.2% over the S&P 500 during the past 2 decades. Another one that you'll find interesting is gold. I mentioned material is not very good, in September, but gold on a relative basis does tend to perform pretty well in September. Not only do we still have a pretty nice looking chart on gold and many gold stocks, but gold tends to benefit when the market's fearful. And so if the S&P 500 tends to go down in September, it would make sense that gold has a tendency to do pretty well in September. And you can see on a relative basis, it's one of the best months in terms of the odds of outperforming the S&P. And then also down here at the bottom, when we talk about relative outperformance, the only months that are better are January and August, and August is another fearful kind of a month. August, September, the 2 months that I would be most fearful looking at history. And these two tend to be pretty good months. And of course, we are enjoying a good August in gold. And so right now, it certainly appears poised to continue that, and seasonality supports that. All right, areas maybe that we want to be a little careful of in the month of September. Well, I would certainly say semiconductors. And I'll go over some individual semiconductor charts that I think you'll be interested to see as well. But over the last 20 years, when you look at semiconductors relative to the S&P 500, there are only 3 months that show negative performance on a relative basis. June, September, and December. June minus 1.2%, December minus 1.1%, September minus 3.3%. That is some serious underperformance in the month of September. Again, I'm going to follow the technicals more so than the seasonality, But if you start to see the group underperforming or breaking down, keep in mind September, that's normal. That's a normal type of behavior for this group in September. How about truckers? And you can see it's about 50-50, but on a relative basis to the S&P 500, the group has underperformed by an average of 2.6% in the month of September, 2.2% in August. So a lot of underperformance there, and it even carries all the way over into October, minus 4.3%. So this is a pretty tough period of the year for truckers. All right. How about steel? We talked about materials. And one of the reasons why material struggles, when you look at steel, only goes up versus the S&P 42% of September's, and the average return, look at August and September back to back, minus 7%. No other month of the year is even close to these two. So we are just not in a good time historically for steel stocks. All right, let's talk about some individual stocks. And I'm going to save those 6 stocks for just a few minutes from now. I'm going to go over the 6 stocks, give you my thoughts, that the 6 that are in the poll. Those are 6 stocks that tend to do really well in the month of September, tend to perform well despite all of the, down currents that we tend to experience during the month of September. But before I get into those, I want to just go over a couple of others that I did not put on the list. So let's first take a look at Apple. A few of you may have heard of this company before. During the month of September, it only goes up about 50% of the time versus the S&P 500. And in terms of relative performance, September and December are the only 2 negative months for Apple. December's the worst, September's second worst. And again, you can see that 32% showing up. I don't know, again, why technology is so weak in December, but many of the areas are really, they tend to perform poorly. All right, so that is Apple. And I just talked about the semiconductors. How about Intel? Well, first thing I want to point out is the last 5 years, Intel's been pretty strong. But when you go back the last 20, it has not been so strong. So that tells me if I take out these last 5 years, go this way with then you're looking at prior to the last 5 years. Yes, the last 5 years has been good. Are we going to revert back to what we had in the prior 15? Because Intel only went up 27% of the time relative to the S&P 500. So 1 out of 4 years. And averaged underperforming by 6 percentage points. That's a lot for a big company to average over a 15-year period. But again, we tack on those last 5 years, and that brings that down. And if you have a short-term memory and only want to look at the last 5 years, you might say, hey, Intel's a great performer in the month of September. So it really is based on your perspective with a lot of these. I can draw some of these out to 20 years. You can make anything fit. I can say, well, those 10 years or these 14 years, this happened. But I think the more data you have, generally speaking, the better the information is. And so I think going back over 20 years is much more educational and informational than going back 5. All right, AMD. While we've got semiconductors, AMD last 20 years relative to the S&P 500, September and October are really bad. Percentage, in terms of how often. Now, also keep in mind, Advanced Micro Devices wasn't really a great performing stock long term. It would have great periods. It would go up, then it would come back down. Then it would go up, come back down. It's really only been the last few years that we've seen Advanced Micro Devices really begin to make headway into its competition, Intel. So I'm not sure how much we want to pay attention to this, but at least be aware of it, that September and October have been pretty bad months. I mean, if we draw this back, even the last 5 years, we just showed how strong Intel was. September and October. September only has gone up 25% of the time, but the average gain was 2.4. Obviously, it had one really good September. And October's been very weak, minus 7.2%. So even the last 5 years haven't been great for AMD. All right, one more semi I wanted to give you, and that is Microchip. Go back 20 years, Microchip goes up less than 50% of the time relative to the S&P, and it averages going down 3.7 percentage points further than the S&P. So all of these I've been giving you are versus the S&P. So if I take out the S&P, you're going to see that this is really bad. So it was minus 3.7 relative to the S&P. It's minus 4.7 just on its own on an absolute basis, because remember, the S&P 500 had a minus 1.0% over the last 20 years. It averages going down 1%. All right, another stock. Now, this is not in the semi space, and then I'm going to go over the poll stocks. But I wanted to go over Booking, formerly Priceline. And you can see last 5 years, not too bad here for September. But when we go back 20, averages going down 7.8% during the month of September. And really, this is one of those crazy seasonality charts where Priceline tends to do have all its strength in the first half of the year. These numbers are outrageous, and look at the percentage chance they go higher. This is over a 20-year period. And then you get into the second half of the year, and it's negative. I think the first half of the year average is going up like 32%. I haven't gone back and added these up, but it's 30, 32, 34, I don't know, something like that. And then you get into the second half of the year, and if you add these across, you come up with a negative. That is just wild to me that over 20 years, a company could trade so differently between its first half and second half of the year. But Booking does, and you really want to be careful. If it begins to break down, just keep in mind September, that would be a normal type of an event for Booking. Okay, we are now going to pull up the poll stocks, and I'm going to bring them up here on the seasonality first, and then I'll pull up the charts, give you kind of my take a little bit, then we'll go see what Erin has to say about the stocks. Facebook, now keep in mind there's only 8 years. Facebook's only been public for 8 years. September, though, 6.1% is worth noting. Averaging, gaining 6.1%, almost 3 out of 4 years, it goes higher. So Facebook's got certainly a tendency to move higher in the month of September. Next up, CME. I'm just doing them in order that they were listed in the poll. All right, next you can see CME over the last 18 years. It goes up roughly 2 out of 3 years, average 5.6%. Now, this is not versus the S&P. This is just strictly on an absolute basis. CME averages going up 5.6% during the month of September over the last 18 years. Baidu, not been one of my favorite stocks, but last 15 years, Baidu's average going up 4.5% in September. And really, when you look at it, another 5%, 5.5% in October. So Baidu tends to show seasonal strength. Alphabet or Google. September averages 5%. October averages 10%. Look at the percentages. Almost 3 out of every 4 years, you're going to see Google move higher in September, and same percentage for October. And don't forget, I just mentioned internet stocks tend to do really well. So Google might be a stock to keep an eye on if the internet stocks start to move, because this is one that tends to get swept up to the upside in the historical current. Next up, ULTA. I will mention ULTA reports its earnings after the bell today. Of course, that won't affect its September seasonality. That will be included in August. But if they do come out with good numbers, look at this chart. This is one of those wow charts. So last 13 years, 91%. So I guess that's 12 out of 13. ULTA's gone up, and the average is 14%. That was kind of a shocker. So ULTA looks good. If they come out with good numbers, raise guidance as we're heading into September, might not be a bad choice. And then the last one, Nike. Talked about footwear earlier and how footwear loves the month of September. Nike maybe it's back to school. Maybe that's the reason for it. But last 20 years, about 3 out of every 4 years, we go higher with Nike. And the average gain during the month of September, 5%. It's its best month of the year. So those are the stocks. Now I want to pull up the charts on these. And I'm going to just go through very quickly so I can give Erin a couple minutes to respond as well. But I see Facebook coming down, starting to break above the 20-day moving average. If it could continue that, that would certainly be a positive. But I want to see whether or not we make that breakout. On a relative basis, it is in that internet space, but it's not showing relative strength to its group right now. So if that were to turn back up, we get the break above the 20, then Facebook would start looking up. Right now, I'm not quite convinced. So that is not going to be my choice. CME is part of the investment services group, and the stock is one of the leaders in the group. It is still looking very good technically, breaking out above the 20-day moving average. And we know seasonality helps the stock. So CME is certainly one to consider. Not going to give away my winner just yet. Baidu, forget about it. I don't like the chart. It's starting to show a little bit of strength with this move. I'd have to at least see this breakout above about 113, 114. The relative weakness in this stock versus internet would keep me out of it for right now. Google did have the big gap up with its earnings. Big surprise there. Came down, double bottom, near gap support. I think if we can get this breakout above 1210, I think Google will start to look really good. And you can see the relative strength versus internet has been picking up for the last maybe 5-6 weeks. So Google, I think, is one to consider. ULTA, I wish we were picking tomorrow, because if ULTA comes through with a good earnings report, this would probably be my pick. I like the way this stock is trading relative to the specialty retailers. I think the specialty retailers are starting to turn back up, breaking this trend line. If I just knew what was going on with their earnings, but because they have relative strength, I think their earnings are going to be pretty good. I think right now they're consolidating after a strong move to the upside. I like this base that's forming, knowing that ULTA is still holding on to support and loves the month of September. That is, well, I'm not going to give it away yet. Nike, last one. Nike breaking back up above the recent highs. I like that. I like getting back up above the 50-day moving average. It is one of the leaders, 52-week high versus footwear, and footwear starting to strengthen again. So Nike would be an interesting pick. I'm going to go out on a limb, Erin. I'm going ULTA. Even with their earnings, I can't pass up that average 14%. It is one of the leaders in the specialty retail space. So that's what I'm going with. Here is your seasonality summary. And now if you would like to take the...
Yes, I will take the screen and give you a little bit of my thoughts on this. And I thought it was very interesting because Nike actually was on my radar yesterday. I did make a couple of purchases, but I did sell quite a bit yesterday. And Nike was one of the selections that I almost bought yesterday. So I really do like the Nike chart. I like that ascending triangle really that's formed here. Look at, you've got the PMO buy signal going on. I really like Nike, but I had to go with CME because it's been in my portfolio now for a couple of months. Back here, I think in late May, somewhere in there is when I bought it. So I'm pretty happy with it, obviously. But I'm looking for it to break out. It is an ascending triangle coming on here, I would say. So I would be looking for that breakout to the upside as well. So I like both of those two, but I can't argue with ULTA. I think that looks great as well, just looking at how my PMO is set up and that nice little breakout, possible double bottom. I mean, I think all of these look pretty good going into September, but my favorite would probably be Nike with a close runner-up of CME.
All right, let's see what the audience thinks, see if they agree with us.
Yes.
Nike, you got the winner.
Hey. Yeah, but ULTA's there in CME, so really I think everybody kind of agreed with this. Baidu, yeah, that's... I don't like that chart really that much right now, but
yeah, it's just got a lot. It's got some proving to do to me. I mean, it's in a good space, the internet space, as we go forward, but it's one of the weakest. And so I'm just not a fan of buying into relative weakness. I just don't think that's a good strategy. And so I personally would avoid Baidu among these 6. I like the other 5 better.
Yep. All right. I think that was pretty good. I do have an RRG. I am going to give your voice a rest, so I'm going to be doing them. And I've put in the top 10 in there, but I thought I'd take a peek here at our RRG. I'm going to move it into the daily format because it's the shorter term. What it's looking at as far as that relative strength on that RRG when you switch it to daily. So it's something to consider. Lots of technology we'll be looking at today for sure. So I'm going to get started with the first one. And let's go ahead and move over here. And that was Twilio.
Yes.
Excellent.
You got to pull your screen up, though.
Yeah, that would help, wouldn't it? Thank you. All right, here we go. Another chart pattern that I like, it's another, what it looks like an ascending triangle coming on here. You can just see that setup right there. The expectation is a breakout to the upside with a move, a minimum upside target about the size of the back end of that triangle, which would put us miraculously, or not so miraculously, at overhead resistance here at about 150. PMO's on a buy signal coming out of oversold territory. Still got a pretty nice looking scooter back up in the positive area there of the hot zone, I should say. It's positive always with the ranking, but I like to look for them moving into that 75 or above area. So I think Twilio looks really good. If I weren't in it, I would consider it as a buy. And of course, if I were in it, I would be holding it. So.
All right. And let's see, we've got, well, ULTA. I mean, we've talked about ULTA.
Yeah, it was the most popular in the chat room, though. So I felt like we had to do it. But I will get in more detail about some of the things that I do like about it. First off is the way the PMO is acting in oversold territory. You do see that the scooter is beginning to make a move to the upside here. And then, like I said, I think you could make a case here for a double bottom right here, sitting on that 200-day EMA. And we are trying to get an execution here of it. There we go. And it does look like we're trying to get it to execute above that confirmation line. It just hasn't, it's trading above it, but it hasn't closed above it. So, but again, you look for the length of that pattern and add that to the top for your minimum upside target, which would put you right about at 360. So I think ULTA does look really good right now. And I could definitely see getting into this one and certainly holding it if I owned it.
All right, next up is going to be Disney, DIS. What do you think?
All righty, let's look at that. Another pretty good looking chart, I have to say. You've got the PMO turning up. Somebody's either using my scan or certainly looking at the kind of analysis that I do. It looks like it's broken from a declining tops, declining tops, but I think you could even, it's going to be, yep, it's going to be a wedge. And that is a bullish pattern. The expectation was the breakout to the upside, and we do have it right now. I'd say the next area of overhead resistance, though, you might be looking at in the short term is right around 140. But I think an upside target of 147.50 is certainly doable. But I'd like to see that breakout at least hold over that 50-day EMA today. And then getting that breakout above 140 would be even better. So I don't know that I would get in it necessarily right now, but I certainly would hold it. I don't see any reason why you wouldn't.
All right. Next up is Flexion Therapeutics, FLXN.
All right. Interesting. I haven't heard of this one. Nice chart. Nice breakout. I think my only concern right now might be the fact that you've got an overbought PMO. It's really getting to the top of that range. But when I look at the lower end of this range, it's around -6, or you could say even to that -8 area. And the PMO ranges are pretty much, negative to positive. So it's either 2 to -2, or in this case, -4 to +4. So a 285 reading on the PMO is not particularly overbought. So it may look overbought, but I don't think that it is. It can certainly rise higher. Look at that nice breakout today. Wow, that's great. And then we also have the 20-50-day EMA positive crossover going on here. Overhead resistance, if I were to move this up just a wee bit, there's where you can see some other overhead resistance. But right now, I'd be really paying attention to this area right around 1325. You have your tops back here in May. Matches up with the tops you can see back here in April. That, I think, is going to be the difficult space. And notice also it lines up with the 200-day EMA. I'd hold it. If I owned it, I don't think I'd be getting in it right now. Just too much overhead resistance.
All right, FLIR Systems, FLIR.
Okay, I think this one's been requested quite a bit over the past few days. All right. Keep an eye on the time too. All right, so short-term breakout. I think you could make a case for a reverse head and shoulders here. There's your left shoulder, that would be your head. There's your right shoulder. It's coming in off of a decline, and that's what you want to see with a reversal pattern. And let's see, what's that neckline look like? It is down sloping. But even if you use this as part of the neckline, even if you wanted to draw it across, we're getting the breakout, and right now it's trading above it. And you have that lovely PMO buy signal going on right there. So I think that looks good. And notice Scooter also making that move to the upside. So I like this chart for FLIR Systems. I think you could make a case for buying it at this point. If I had it, I'd certainly hold it.
All right, Lattice Semiconductor, LSCC.
Okay. Pretty much a consolidation pattern here, but I think it makes a nice finish off of an uptrend here. And so I think you could make a case here for a flag formation. And I bet if you looked at it on a weekly chart, it'd be even more obvious. It's also, excuse me, if I bring these down and actually make them trend lines, it has not broken out to the upside yet from that declining tops trend line. But I notice that we do have a symmetrical triangle and, you know, that, or a pennant on a flagpole. And in both cases, you would expect an upside breakout. So a symmetrical triangle is a continuation, and the flag there is a bull flag, and you could expect an upside breakout. I'd certainly consider this as a buy, but it is up 4% today. And obviously, if you owned it, why wouldn't you hold it? So
I agree. Next up, NVIDIA, NVDA. Got 4 more.
all right, here we go. Pretty popular one. Wow, the 200-day EMA is certainly showing a lot of resistance for this one. It's really held up really since we had that breakdown below it. The 50 is still below the 200. I do see 20-50-day positive crossover. That's a buy signal for the intermediate term trend model, and it's coming right on the heels of a PMO buy signal. But we're just not getting much out of that. We got the move to the upside, and it's just been trending lower. Let's see, we can draw another support area. So you might have just a trading zone going on here. PMO is on that buy signal, like I said, and turning up, but I just don't like the feel of this chart. I think you could certainly find something better in that semiconductor space. I'm sure, Tom, you have a few you could recommend, but I see that declining tops trend line. It's just not, it just can't seem to get above that area of overhead resistance, and I don't feel particularly positive about it.
Yeah, I mean, there are definitely some good ones I wouldn't want to recommend because you know, I'm not in that business.
Well, yeah, we're not in that business, but,
I mean, companies like Teradyne, even Micron, starting to show some better strength. NVIDIA just on a relative basis, not doing much.
yeah.
8 stock EVTC, Evertech.
All righty. Sounds good here. Another possible flag. You've got that consolidation zone going on here. Let's see. Let's draw that in from that top. And honestly, I think you can make a case here, though, for a descending triangle. And those are bearish formations. and I hadn't even looked at the PMO, but then I looked down and we're on a sell signal. So I think it's all pointing to leaving this particular stock and not sticking around. You're supposed to expect that downside move. So I'm not a fan here. I think if I held it, if I'd been holding it long enough and, I'd gotten in earlier, I might consider just taking my profits here because it does look like it's ready for that downside breakdown.
All right. Arista Networks, ANET, ANET.
Okay, got it. It's turning around here. Let's use our parabolic tool here, our parabola. And so you've got that cup or rounded bottom that is forming, and it's coming in as the PMO is turning up and ready for a buy signal. Last buy signal was, you had to deal with some decline, but once it managed to turn back up, it started to look a lot better. So I think we're doing pretty good here. I like the looks of this. It's just, it wouldn't be number one on my list just because you've got this negative formation of your EMAs with the fastest on the bottom. It's been in a decline. So I don't know if I would want to get in here on the hopes that we're going to get back up here to close that gap. It's certainly possible though.
All right. And let's see, your last one is Beazer Homes, BZH, BZH.
Okay. It's still in a intermediate term rising trend. So I think that is good. Let's see if we do this, if we get a rising trend channel. Just about. I think you could make a case for it. And it tried to break out though, and then it failed, and it looks like it's coming back down. Could be testing the 20. It is bouncing off of that. I don't like the overbought PMO though. I think if I had it, I'd still hold it just because it is in a nice rising trend still. 50 getting ready to cross above the 200. Not so I mean, maybe put it on a watch list and see if it tests that rising bottoms trend line. But, overbought PMO, that's not usually what I look to get into. So, but I think if I had it, I'd be holding it.
All right. And that is the 10 and 10.
Woohoo!
Made it. You did it.
All right. Yes, I did. I've had a good role model over the years here.
Yeah, well, I tell you what, it takes practice for sure because it's easy to talk a lot longer about the stocks. And, if you wanted to just do a review of the stock, you really should be looking at the long-term chart. Maybe if you're looking for entry, a lot of folks maybe move to the 60-minute chart. So there's some other things you could do with it. But the whole idea with the 10 and 10 is just showing how quickly you can annotate and save here at StockCharts, which is a great feature, really.
Yeah, absolutely. And I know when you all request them, you want our advice, but as Tom just hinted to, that's not what we do.
No, I don't give advice. I'm not a registered investment advisor, so I can't give advice. Really, it's all about it. We want to make sure that we help to educate and hopefully folks pick up some things from us and combine some different strategies and make it all work.
Exactly.
All right. Well, here is an update. You can see the Dow Jones Industrial Average now up 348 points. The NASDAQ up 121. The S&P up 38.75, so 38.75. Russell 2000 having another day, good day. Back-to-back positive days for small caps, not a bad thing, and transportation as well. I mean, I was looking at the sector summary earlier, and this will wrap up with this, but you can see of the top 7 groups that are up more than 1.25%, 5 of them are the aggressive groups. All of your defense down at the bottom. I think that's a pretty good thing for the market. We'll see whether or not it can continue. Volatility continuing to drift lower as well. So anyway, some positives at least developing as we get close to the end of the week.
Mm-hmm.
All right. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1 p.m. Have a great Thursday afternoon, everybody, and we will see you back here tomorrow. Happy trading.